afternoon and good evening. My name is Jaden Doye, the law firm CPA, and I'm excited to present to you my training, Don't Get Disbarred, the seven financial mistakes attorneys make that put their license at risk. Now, I'm pretty sure that you can agree with me that running a firm, running a business over the past few years, given the pandemic and things of that nature, it's made running your firm more challenging. Solo practitioners and small firms actually make up majority of the legal profession, but unfortunately, many of the law firm owners I talk to are struggling now more than ever. For example, in Clio's 2018 solo and small firm compensation survey report, it found that 54% of solo practitioners earn less than $100,000 a year, and only 19% of solos are able to bring home more than $250,000 a year from their business. As a law firm owner, you have hundreds of decisions to make every week about finances, accounting, taxes, payroll, banking, and so much more. And it can be very hard if you're to know if you're doing the right thing or making a good decision. Given these numbers, I want you to really think if you are living the life that you truly desire. Running a business that only makes $100,000 is selling yourself short, being that your salary could be over $100,000 straight out of law school. When was the last time you sat and thought about, is this decision the best decision financially for my business? Do you sometimes feel like you're unsure of yourself? Are you afraid that sometimes you may be making severe financial mistakes, but to talk about it kind of brings you even more anxiety because part of you feels embarrassed? Well, I'm here to tell you that it's not your fault. And there's a lot of things that you have to do to perfect your craft and provide excellent service to your clients. And sometimes it is okay to get the advice for your business so that you can leverage that advice to create lasting wealth for yourself and your family. And I'm actually going to, over this training, talk to you about the seven biggest mistakes that I've noticed that self-employed attorneys make that actually put their license at risk. And the worst part is, even only letting one or two of these mistakes go unchecked can leave you working harder than you have to make much money than you want. But don't worry, all of these problems can be fixed, and I will also give you some solutions that can help you save thousands of dollars and make thousands of more dollars. So let's get right into it and go over the seven mistakes. Number one is commingling funds and third party funds. This pretty much goes without saying that you don't need to steal from your client. Okay. Now, I want you to know that every state has their requirements about specific types of accounts in which third party and client funds can legally be held. Auto rule provided by the American Bar Association is the ABA Rule 1.15. And most states have adopted this rule in their own rulings as it pertains to the rules that you have to abide by as a lawyer in the state that you're barred in. But commingling, for those who don't know, occurs when an attorney holds his or her own funds in the same account that is holding client or third party funds. Commingling itself is a violation of ethic rules and may subject a lawyer to discipline. The problem is that avoiding commingling may not be easy. It is exceedingly difficult to determine which funds belong to the lawyers and which actually belongs to their client, depending on how your firm is. For example, attorneys are entitled to funds from certain fees as soon as they are paid, and in most jurisdictions, it would violate commingling regulations to deposit these funds into a client trust account. So every state has their own ruling as it pertains to flat fees and earned upon receipt, and you need to know that rule before taking money from any client. Other fees are just merely advances that the lawyer will earn throughout the legal process. And these funds actually currently belong to the client. They should be stored into the trust account per your state regulation until earned. Some states' rules have exceptions that specifically allow funds belonging to a lawyer or the law firm to be deposited or otherwise commingled with funds held in a trust account when the funds are reasonably sufficient to pay account charges imposed by the bank, belong in part to a client and in part presently or potentially to the lawyer. The lawyer's portion should be withdrawn when due unless the client disputes the lawyer or law firm's right to withdraw the funds. In this situation, the lawyer or law firm can't withdraw the funds until this dispute is resolved. The bottom line is you need a well documented process and procedures to ensure that trust accounts are managed properly and reconciled every month so you don't run the risk of failing to comply with your state bar rules. You to actually pause this training and take a look at your balance sheet. If the total trust account balances that are in the asset section do not equal the total in the liability account called client trust liabilities or trust account, then there's a high chance that your financial records are not compliant. And then I want you to take it a step further and verify that that liability account has sub accounts. Because as you know, every matter that you have that currently has funds in your client trust account should be tracked individually. So there should be a sub account of that trust account liability with every matter that has money in your trust account. And every time a transaction happens, it should be accurately coded to that account. And most accountants, unfortunately, don't do that correctly. Mistake number two, not keeping adequate records for trust account transactions. It goes back to the Rule 1.15 that states preserve complete records for the law firm's trust account. Because a violation of Rule 1.15 may subject an attorney to professional discipline, law firm owners should ensure that their bookkeeping and other financial records are kept up to date. Otherwise, they may find themselves in a situation that puts their professional license in jeopardy. And I know what you're thinking. You're probably thinking, well, I keep up with my trust account in Clio. I keep up with my trust account in my notebook. Well, I've worked with quite a few attorneys when they're being audited, and these bar associations are actually looking for your financial records. Okay, so whatever happens with your trust account should be accounted for in your accounting system. You must also promptly render a full accounting for the receipt of the distribution of trust property. So at any time, you should be able to pull a client ledger to show all of the incoming and outgoing funds for each specific. Here are the nine different types of financial records that you as a law firm owner should keep up with. Number one is your receipt and disbursement journal. This contains the records of deposits and withdrawals from the bank account which concern or affect the lawyer's practice of law, specifically identifying the date, source, and description of each item deposited, as well as the date, payee, and purpose of each disbursement. Number two is the ledger records. For all trust accounts required by Rule 1.15, showing for each separate client trust or beneficiary, the source of all the funds deposited, the names of the persons for whom the funds were held, the amount of such funds, the descriptions of the amounts of charges or withdrawals, and the names of the persons to whom the funds were dispersed to. Number three is copies of retainers and compensation agreements. Number four is copies of accounting to clients or third parties. This shows the disbursement of funds to them on their behalf. Number five, copies of bills for legal fees and expenses rendered for the client. So personal injury attorneys. This means every time you get an invoice from the doctor, the chiropractor, make sure that you save it to your records. Number six is copies of records showing disbursements on behalf of the clients. So, for example, check images, things of that nature. Number seven, checkbook registers or check stubs, bank statements, records of deposit, and pre-number cancel checks or the equivalent on behalf of clients. Number eight, copies of monthly trial balances, quarterly reconciliations of the trust accounts. And number nine, copies of the portions of clients' files that are reasonably necessary for a complete understanding of the financial transactions pertaining to them. To maintain compliance with these requirements, law firm owners must have a well-defined document retention policies. Using a cloud-based legal practice management software with an integrated document management solution can help you automate this area of your practice so you can have peace of mind that client files will be readily accessible when you need them in the future. Now we want to talk about number three, exposing your client data to cybersecurity risks. Today, the question isn't if, but when your law firm will be attacked and to what extent the damage will be. Law firms and CPA firms are greatly targeted for cyber attacks. So, a starting point for understanding the risk associated with cybersecurity is the annual ABA Legal Technology Survey report. Attorneys who took this survey reported whether or not firms had suffered a cyber breach. And in 2018, 23% of responding firms stated that they had suffered a cybersecurity breach at some point in time. And I believe that number has increased since then. And I also believe not everybody wants to admit it. It is legally mandated that attorneys protect the client's confidential information. And that is nothing new. However, what is new is the specific ways which lawyers and law firms must protect their clients in the cyberspace. Rule 1.1 of the Model Rule of Professional Conduct directs attorneys to keep abreast of changes in the law and its practice, including the benefits and risks associated with relevant technology. You must monitor network activity, review IT reports, and perhaps employ a chief information security officer in developing, implementing, and maintaining appropriate cybersecurity problems. So, what can your firm do to protect both you and your clients? Well, you want to make sure that you're working with someone that specializes in law firms to help you develop internal controls to ensure that your clients' records and data are protected from cyber attacks. And make sure that you have insurance. I can't tell you how many people I come across who do their business on the cloud and have never heard of cyber insurance. You are putting your firm and your clients at risk. Mistake number four is not properly leveraging technology to seize. At the end of the day, time is money. This means non-billable tasks are one of the biggest problems that law firm owners face. Three different terms that you need to know are utilization rate, realization rate, and collection rate. Your utilization rate is the number of billable hours worked divided by the numbers of hours in a day. Your realization rate is the number of billable hours invoiced divided by the number of hours worked. And your collection rate is the number of hours collected divided by the number of hours invoiced. Ideally, you want your realization rates to be very high. If they're low, that means you're not getting paid for the time, and that means that you actually need to increase efficiency in your firm. If your collection rates are low, then that means that you have to increase your AR methods, accounts receivable, for those who don't know what that stands for. This means that you need to up your cash collection policies. Now, we do know that non-billable tasks are essential for your law firm's long-term growth and success, but at the same time, they cost you money and take up precious time that could be spent performing high-value functions. It doesn't make sense for you as the firm owner to be scanning documents, going to the post office, and having consultations with people that have absolutely no money and no idea how much it costs or don't want to move forward working with your firm. In effect, Clio in 2019 Legal Trends report found that the average lawyer in the United States does only about 2.5 billable work hours a day. In other words, when compared to a standard 8-hour workday, the typical attorney has a 31% utilization rate. Every minute you spend doing low value tasks can be automated is a minute that can be billed out. So think about that. Can you get more of your time back? I'm going to tell you a quick story about a client that I helped. This client had no practice management system and they were having troubles kind of crossing over the six-figure mark, which isn't that hard to get through, right? So the problem was that they weren't tracking time. So first we had to implement some time tracking policies. So once we monitored, after we reviewed the time, we noticed that at any given week, he was spending an average of anywhere from 20 to 30% of his time on non-billable tasks and non-income producing tasks. So I helped him implement a legal practice management system that fast-tracked this process of converting new prospects into clients, including automated his onboarding workflow. I also showed this client how to track every minute of his day without having to turn in those annoying timers on and off. And he could identify the efficiencies in his business and develop better systems that enabled him to win back his time. Because time was his most valuable asset as the owner of a small law firm, implementing just one simple strategy allowed him to hire an administrative assistant and delegate most of those mundane tasks that were eating up most of his time. Overall, using the right technology solutions in your law firm can reduce human error, increase efficiency, decrease overhead, provide flexibility, and enhance your well being and better meet your client needs. Stressful, and the pressures attorneys face can take a serious toll on their health. Lawyers work in an adversarial system that is very demanding with demanding schedules, heavy workloads, and this actually contributes to increased stress levels. In fact, the legal profession has some of the highest rates of addiction, depression, and suicide in comparison to other occupations. Lawyers also have an above average divorce rate and illnesses that are caused by stress. So, not proactively protecting your physical and mental health from financial stress is definitely a mistake that I see. According to a study by ALM Intelligence, a leading legal industry market research firm, 73.4% of attorneys surveyed reported that their work conditions contributed to anxiety, depression, and substance abuse and other medical mental health problems. Some of the stressors that attorneys face on a daily duty include deadlines, billing, client demands, long hours, ever changing laws, student loan debt, and so much more. In addition to these everyday stressors, attorneys also suffer from what's called secondary trauma while dealing with their client's stress and anger, frustration, and emotions. This must also sometimes act in a way that isn't aligned with their core values. And all of this stress can lead to serious negative financial consequences. Research has shown that stress negatively impacts our ability to make informed and rational financial decisions. When we're stressed out, we feel like we're losing control and tend to be worse with saving and budgeting for the long term and become more impulsive with the ways we spend our money. What does this mean for you? Well, if you don't take proactive approach to safeguard your mental and emotional health, you could find yourself making financial decisions and putting your business in jeopardy. As a CPA who specializes in working with self employed attorneys and law firm owners, I can relieve you of the financial burdens and stress that you face while running your business. Number six, not understanding the difference between profit and cash flow. One of the most important things you must understand when owning and operating a law firm is the difference between profit and cash flow. Every law firm owner starts their business aspiring to turn a profit, but what they don't realize is that their cash flow is actually more intense. Imagine a hypothetical situation. You meet with your CPA at the end of the year to review your financial statements, and you say that your business made a substantial profit. While this is great news, you can't help but to be surprised. Why? Because there's no money in the bank. You have no idea how you're going to pay your income taxes on that profit. And this happens more often than you think. Many attorneys make a profit in their business while being cash flow negative, and others have lots of cash flow but no profit to show for it. For example, a law firm can have a positive cash flow while having no profit if the money that comes in comes from other sources other than income, such as when the owner puts money into the business. These transactions are not income. They're a liability or equity transactions that appear on the balance sheet. On the other hand, a solo practice or small law firm has negative cash flow while having a large profit if the owner takes cash out of the business to pay personal expenses or uses it to make investments or loans to others. These type of transactions where cash is taken out of the business are reported on the balance sheet, not the profit and loss. As a law firm owner, you must understand the critical difference between profits and cash flow if you want to leverage your business success to create lasting wealth. Number seven is not taking advantage of proactive tax reduction strategies. As you may know or may not know, taxes can actually be a large, very large expense for firm owners if they do not do proactive strategies. So I'm going to go over some of the strategies that are commonly missed. One, preparing for retirement is very important. You have your simple IRA, your SEP IRA, your solo and 401k plans, various different plans that can affect the owner in various different ways because there's different amounts of caps that you can contribute. And then you also have the idea, the concept of pre-tax and post-tax. But these are just a few examples to talk with your financial advisor about different plans that may help you from a tax perspective. Also, employing family members could be a great tax saving strategy because it can allow you to shift income into a lower tax bracket and allow you to invest in your children's or spouse retirement plan. Now, some rules must be followed to claim this specific deduction. For example, your child must be of legal working age according to your state laws, and you must pay them a reasonable wage for the work performed. They also must be working for the firm. You can't just pay them to do nothing or pay them to take out the trash. Okay? If your law firm has a retirement plan set up, you can help your family member by start saving for retirement by contributing. We also have health reimbursement arrangements. Under certain circumstances, law firms can reimburse employees for legitimate out of pocket medical expenses. Employers can report these reimbursed medical expenses as a business deduction by implementing a qualified small employer health reimbursement arrangement. If all the requirements are met, the reimbursements are not subject to income taxes or payroll taxes. Your business is eligible to set up a qualified plan if you have less than 50 employees, you don't offer group health insurance, and you offer the same benefit to all. The next one is entity choice. Choosing the type of entity that you want to be taxed as can save you tens of thousands of dollars every year. But there's technically no one size fits all approach, and deciding on the type of tax entity that is right for you, for your business, depends on many different factors, including revenue size and your long term goals. Because sometimes, if you elect to be in a certain entity, you can't get out of that for 60 months, meaning you're stuck for 5 years. So you also have to not only think about today, but the next 5 years as well. You must look at all aspects of your firm to determine if you would benefit as a sole proprietor, S Corp, C Corp, or being taxed as a partnership. Meeting with a qualified tax professional like myself to help you determine the right entity type for your law firm can be of dollars. Then we have tax-free reimbursement plans. Law firms can actually reimburse owners and employees for out-of-pocket expenses under an accountable plan, a set of rules and processes that allows tax-free reimbursements of certain business expenses. These expenses include items that would be deductible if the business had paid them directly and they are related to the law firm's operations. To qualify, you must have an accountable reimbursement plan in place. Your accountable plan should detail when your employees need to provide you with substantiating documents and how to return any funds paid out in advance that were not spent on legitimate business expenses. We can advise you on setting up expense reports and reimbursement processes that will pass the IRS examination. The best time to take advantage of the tax saving strategies like this is right now. And if that's something that you're interested in, I would love to meet with you and talk about what different strategies you can use to save money on taxes so that you can keep more of your hard. In conclusion, making just one of these mistakes can cost you thousands of dollars and dozens of hours of your precious time each and every month. If you watch this training and you might be making one of these mistakes and you feel like you're too far gone, guess what? There is hope for you. This is what we do all day, every day, baby. We care for law firm owners and the legal community, and I'm here to help you overcome your financial mistakes so that you can plan a better future for your business, yourself, and your family. I invite you to book a consultation with me. I'd love to give you 30 minutes of my time where we can do a deep dive into your business structure, tax strategy, and accounting system to make sure that your business isn't leaking your hard earned money. At the end of the call, you'll have a clear plan for what you need to do to turn your law firm into a wealth generating machine. And there's no obligation to move forward. So I won't be holding back. So I hope you won't either. The best case scenario is that I'll help you with strategies to save thousands of dollars and make way more money so that you can live the life that you want. Worst case scenario is you get a peace of mind from an experienced CPA. How does that sound? Well, thank you for your attention in today's training, and I would invite you to link to book your complimentary consultation today. I look forward to working with you.